When life knocks you down, and life will knock you down, try to land on your back. Because if you can look up, you can get up. Welcome to Fire with Dr. Ninja Turtle.
Hi everybody, welcome back to Fire with Dr. Ninja Turtle. In this video, we are going to talk about fees that people pay in investing. On our channel, we talk about all things personal finance because personal finance is personal. The things that we're going to cover in this video are what are investment fees, the myth of just 1% investment fee, looking at online calculators that help you learn how much you could possibly be losing in your net return due to investment fees. And lastly, we're going to look at smarter choices. What are investment fees? Investment fees are sometimes known as assets under management. We'll say that you have $250,000, $500,000, or more than $1 million to invest. Someone will manage that money for you and manage your investments for you, and they get paid based on the assets that you give them that they're managing. And let's just say it's a 1% fee on $1 million. That is a lot of money, but they are doing all the work for you in your retirement so that you can live a life of leisure. An example is if there is $1 million under management, the manager is receiving $10,000 per year to manage your money. Do you have $10,000 per year to pay someone to make your investment decisions for you? Some advisors use a tiered system. The more money that you invest, the less they charge you. However, you have to realize that this goes up at the increments of like $2.5 million, $5 million, $10 million. When you have that kind of money, they will charge you a little bit less to manage your assets. We've talked about an asset manager. We've not talked about the fees that are connected to mutual funds. So let's look at the fees connected to mutual funds. If it's an active managed mutual fund, there are more fees than a passive managed mutual fund. Let's get into it. With mutual funds, there is an expense ratio, which is an annual fee that is charged for all the operating costs of that mutual fund. In Vanguard, their fees are very, very low. There are fidelity funds that have zero expense ratio fees, and we're going to talk about those in just a little bit. Keep in mind, you work hard for your money. Let your money work hard for you. That's what we do here at Fire with Dr. Ninja Turtle. We learn about personal finance and what personal finance can do for you to help you retire early. Also, with mutual funds, there could be a front-end loaded fund and a back-end loaded fund. On the front-end loaded fund, you pay the fee at the beginning when you buy the fund. At the back-end fee, you pay the fee when you sell the mutual fund. Either way, you're going to pay a fee to get in and out of that investment. Let's talk about hidden fees. There are hidden fees within the mutual fund. There are more hidden fees in an active managed mutual fund. This person could be buying and selling. When stocks are sold, there are tax consequences. These aren't always explained to you in the prospectus. You just have to know that a passive managed mutual fund should have less transactions than an active managed mutual fund. Therefore, less taxes. Let's look at an expense ratio fee. Whether the fund makes money or loses money, you are going to pay this every single year. So if you invest $10,000 and you have a 1.5 expense ratio, if that fund loses money, you are still getting charged that annual fee of $150. Now, if you compound that to $1 million or $5 million and your fund is losing money, you are still paying that annual fee on top of your fund losing money. Let's talk about funds that have a zero expense ratio. Fidelity has 4 of them, and they charge a 0% expense ratio, and I've recommended some of them to friends and family. What I can say about this is that these are loss leaders. Companies do this and don't make money on them because they want to get new and low-income investors through the door into their ecosystem. So this is a good way for people with not much money to get started in investing. Also, it is important to note that even though these Fidelity funds do not have an expense ratio, there could be transaction costs that are passed on to the investor. Again, there's always hidden costs. Let's look at the 1% myth. If you have $10,000 invested and you get a 9% return, you're only getting an 8% return after your 1% fee has been deducted. As you compound that into millions of dollars, that becomes a significant amount of money. And we're going to look at calculators that actually show you how much money you lose with that expense ratio fee or the assets under management fee. We are now going to look at 3 different calculators where you can compare fees. I will have links to all 3 of these calculators in the description of this video. You choose the calculator that works best for you, because with Fire with Dr. Ninja Turtle, you make your own personal finance decisions. With this calculator, you can see that it only gives you the option of a 20-year investing career. That is not very helpful to me. I want to be able to see, what if I am closer to retirement? What are going to be the fees over a shorter period of time? Let's say I'm younger and I want to know, what are the fees from my 20s all the way to my 60s? That's what I'm looking for in these calculators. This is the second calculator, which is from NerdWallet. And as you can see here, you can only calculate the fee for one fund at a time. That is very time consuming, and you would have to go in here and put in each mutual fund's fee to see how much of your return you would lose. In this calculator, we're going to see just how flexible a calculator can be. With this calculator, you can change the amount of time of your investment, you can compare different fees, and you can actually see what your balance would be with various fees. Let's look at the results. As you can see, if you had a 2% fee, meaning net after fee would be 8% on a 10% gain, or if you had a 1% fee on a mutual fund and your net gain was 9% after a 10% gain, or you had a 0% fee, let's say within Fidelity's free fee funds, then you could have a whole balance of 10%. Let's look at the actual numbers over a 30-year investing career. You would have, with a 2% fee, you would have $1,077,146. With a 1% fee, you would have $1,412,487. With a 0% fee, you would have $1.8 million. Compare those. That's where fees make a difference. 1.8 million as opposed to 1 million. That's an $800,000 difference over the course of 30 years. Let's talk about smarter ways to invest. DIY investing through Fidelity, through Schwab, through Vanguard are excellent ways to keep your expense ratios low. You can have actively managed funds within these brokerages, but also you can choose passively managed funds. And even in Fidelity, you can get 0% expense ratio funds. Those are excellent for DIY investors. There are robo-advisors like Betterment or M1 Finance. Those help you by investing the money for you. You give them the money, you tell them your risk profile, and they will put the money into what you want them to put the money into. You could also do target date funds, where you put the money in, tell them when you expect to retire, and they will rebalance your portfolio. The last thing about being a smart investor is being aware of expense ratios. There are actively managed funds, there's assets under management that we've talked about before, and then there are passively managed funds. I am not in any actively managed funds. However, if you are not familiar with what it is that you're investing in and you need help, you may want an actively managed fund, or you may want to have someone manage your assets for you so that you do not lose your wealth. Keep in mind, you work hard for your money. Your money should work hard for you. Money never sleeps. Follow FIRE with Dr. Ninja Turtle for more personal finance tips. Now let's get into our wrap-up. The key message in this video is little fees add up to big losses, and you don't want that. Also, we talked about how you can get to FIRE faster by watching your expense ratios. I encourage you to run your own numbers. No one will manage your money better than you can. I am challenging you to download that FIRE worksheet. The link is in the description. I also have other worksheets that are free, and the links are in the descriptions of prior videos. You don't have to be rich to grow wealth. You just have to be wise enough to keep it. Remember, never let your past determine your future.